My name is Tim Warman. I'm the CEO of Fiore Gold. Skip through the forward-looking statements. So, Fiore operates the Pan mine in Nevada, a producing mine that we purchased from Midway Gold's bankruptcy in 2017. It's an asset that Midway spent about $100 million building and putting into production in 2015, and then promptly went bankrupt following a series of operational issues that they had with the project. As I said, we picked it up the next year out of bankruptcy for $5 million and have been fixing the problems that Midway ran into, and we now have the mine operating well and producing operational cash flow. We have growth potential both organically next door with our Gold Rock project, which just received U.S. federal permitting in September. It's one of the few fully permitted development projects in Nevada, and we'll be advancing that this year. And then we have some other assets that I'll mention briefly. So as I said, we're mainly focused on the United States, the Western United States. We have Pan and Gold Rock in Nevada. We have our Golden Eagle project, which I'll just touch on quickly, in Washington State. And then we have some, historic projects in Chile that we're currently looking for a home for, earlier stage exploration projects. So the Pan mine. So Pan mine ran into a number of issues when it was first put into production, with grade reconciliation, with the resource model and the reserve model not holding up to scrutiny once mining started. Ran into some issues with heap leach permeability and also heap leach stability. And we've addressed all of these things through a combination of additional drilling, 45,000 feet of new drilling. We've completely updated the resource and the reserve model, the alteration model, the geology model from scratch. And in terms of grade reconciliation, we've gone from a very bad situation with Midway, and we're now reconciling to within about 3% of our reserve grade. So excellent reconciliation to the current model. That problem is solved. Heap leach permeability issues. Again, Midway was mining in a very clay part of the ore body. They ended up with about 3 million tons of clay on the leach pad before they started irrigating. And not surprisingly, that didn't work very well. When you put leach solution on a big pile of clay, it doesn't really soak in. So we went back and rehabilitated that by opening up a very rocky part of the deposit called the North Pan area. We blended that rocky material in with the clay to increase permeability. And now, when we're mining, we actually blend on the pad with rocky material from the North Pit and the clay-rich material from the South Pit, and all of the permeability issues have been resolved, and the mine is producing as expected. It's currently operated as a run-of-mine operation. We simply mine and dump directly onto the pad and leach and a simple ADR recovery plant. So it's a very low-cost, simple process. We put the mine into commercial production in March of 2017 and ramped up to the full production rate of 14,000 tons of ore per day in September of 2017. We've had our first full year of production, and you can see as gold production increased, as the leach kinetics started to kick in, we're getting up to our standard production rate of somewhere between 8,000 and 10,000 ounces per quarter, or about 35,000 to 40,000 ounces per year. Costs have come down to where we want them to be, to below $1,000 all-in sustaining cost on a project basis as the production went up. And we've been very, very good at controlling costs. We're probably one of the few companies that's come in with mining and processing costs below our feasibility estimates. Obviously, operating cash flow has increased as costs have come down and gold production has come up. And I think we'll end up somewhere with about $10 million of operating cash flow in fiscal 2017. The last quarter saw a lot lower gold prices, so obviously our cash flow wasn't quite so robust. But again, we're seeing the joy of gold prices closer to $1,300 in the current quarter. The resource and reserve statement for Pan, we started out mining in 2016 with about 434,000 ounces. We mined for 19 months. We finished up a drilling program last year, and we built the resource up and replaced pretty much all of the M&I resources that were mined out since the start of mining back in 2016. We are currently undertaking a reserve update and a new life of mine plan to incorporate that new material, which we're pretty confident will extend the mine life. We're also looking at incorporating a crushing circuit into that new life of mine plan, and we should have some news on that crusher in the next couple of weeks. Pan mine has considerable exploration upside. The structure that controls the Pan mine is called the Branham Fault, and the Branham Fault runs from north to south through the concession area for about 10 kilometers. And you can see the Pan mine occupies only about maybe a third of that trend. The rest of it is still undrilled. As I said, December 2018 resource update, we managed to replace the full 19 months of resource that we depleted since starting mining there. So we've been very successful in extending the mine life, and we're confident that we'll continue to extend the life of mine for many years to come. Next door on a contiguous land package is the former Gold Rock property, the old Echo Bay Gold Rock or Easy Junior mine that was operated briefly in the 1990s. You can see it there. And Gold Rock, we recently put out a new resource estimate on it, 238,000 ounces of indicated and another 180,000 ounces of inferred at about 60% higher grade than Pan. Again, like Pan, it's an oxide, open pit, heap leach type deposit. Very simple, very straightforward, very low cost. It's part of a 200 square kilometer land package. It's one of the largest land packages controlled by a junior in Nevada. And probably the thing that sets Gold Rock apart from almost any other project in Nevada is that in September of 2018, we received our federal record of decision on our EIS for a full mine build there. So that thing is fully permitted for mine construction on a federal level. What would be remaining is the state permits, which are relatively straightforward in Nevada, and we'll be advancing that project. We did a small drilling program along trend from there. We extended the structure, the alteration, the mineralization about 4 or 5 kilometers to the north of the Gold Rock resource area. And that trend extends sort of in the northeast direction from one end of the property to the other for about 16 kilometers. It's the same geology, very similar structure to Kinross's Bald Mountain mine, which is just to the north of us. And this is the reason why when we went public with the GRP transaction, Kinross came in as a strategic investor. They hold about 6% of the company now and have been very good in terms of providing technical support as well. We have a couple of other projects that we're currently looking to extract value from, I guess. Golden Eagle has a historical resource of about 1.7 million ounces in Washington State. It's surrounded by ground that's controlled by Hecla. We would like to do a deal with Hecla. We've had a number of conversations with them, but they're very focused on integrating their Klondex assets in Nevada, and so things have been moving relatively slowly there. We're not too concerned about that. The carrying cost for this property is about $10,000 a year. So it's really, we're in no great rush to do anything with it. I should note that that historical resource of 1.74 million ounces was done with a gold price of $750. So we think it can be considerably larger at $1,300 gold. We also have a couple of projects in Chile from when the company was called Fiore Exploration. We've got a couple of the producers looking in Chile at those assets right now, and hopefully we'll be able to find a home for them. Fairly simple share structure, 97 million shares outstanding, market cap's about $35, $40 million. We have no debt, and we have about 6 or 7 million US in cash, so 9.4 million Canadian as of the last quarter. Resource and reserve statement, I won't go into that in too much detail. Valuation, we think we're incredibly undervalued relative to our peer small to medium-sized producers. It's been tough getting attention in the market as a small producer, which is why we're trying to grow the company, both through organic growth at Gold Rock as well as M&A. We see ourselves as a logical consolidator of some of the smaller single asset producers in the US, in Canada, and in parts of Mexico. So, successful year in 2018. We completed the Pan mine ramp up. We expanded the resource base. We got the Gold Rock permit. And looking forward, in the next couple of weeks, you'll see an announcement on crushing at Pan mine. You'll see an updated life of mine schedule for Pan and a reserve update. And again, we'll hope to unlock some of the value in Golden Eagle and Chile. And then finally, we're hoping to see some traction on putting together some quality assets to build that production base beyond the current 35 to 40,000 ounce and get that up closer to 150,000 ounce. We see really the near-term goal of the company is to have 3 or 4 assets to bring us up to that 150,000 ounce range. And I'll just leave it there. Thank you.